Hello, I'm Charisma Sutherland, your 2024 president, and I'm excited to share some news about two new products that Canopy has to offer. We already launched Forewarn, an application that gives agents the ability to verify identity, search for criminal histories, and validate information provided by potential clients. Down Payment Resource, or DPR, is the second product that we're excited to launch. Leading up to the launch, we are offering this series of webinars to prepare you to be able to use the down payment resource information to assist your buyers and also to educate listing agents and sellers about the important role down payment assistance plays in the markets we serve, where affordability is harder and harder to find. Why is this important? We know that millions of dollars in assistance is underutilized every year just in the Charlotte region alone, meaning the renters may not even know that they qualify for home ownership through the thousands of applicable programs. We look forward to integrating this information so it's available at your fingertips.
Welcome, and thank you everyone for joining us today to discuss the basics of down payment assistance programs. We certainly appreciate Canopy MLS for giving us the opportunity to discuss what DPA programs have in common, how they're different, and what you need to know to start conversations about down payment assistance without being a program expert. My name is Will Medina from our DPR team. We also have with us today Melinda Harris, our Director of Marketing and Communication. I believe Sean Moss, our EVP of Product Development and Operations, and Tracy McIntosh, our Business Coordinator. They'll be in the background answering questions, so feel free to use the Zoom Q&A feature to engage with them as we go. And we will also leave time at the end for some additional Q&A. And before we get started, as mentioned, today's recording of the webinar will be shared with everyone. So first, a little about who we are. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer programs. So DPR developed an easier way to connect eligible borrowers with hard-to-find resources like DPAs, grants, MCCs, and other forms of assistance. We provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions out there for your buyers. And just as a fun fact, we're celebrating 16 years this year. We're extremely thankful for all the support, and we're looking forward to continuing our mission and our vision. Ultimately, we're here to help you connect home buyers to the down payment help they need. So today, we will be discussing the basics of loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, cover closing costs, and get them into a home sooner than they would have otherwise. So of all the homebuyer programs out there, 74% are some sort of down payment or closing cost assistance. Now that's really a catch-all category, and we'll dig deeper in a few minutes, but it's important to know that not all DPAs are the same. 81% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 54% are forgivable, either in part or in full, essentially becoming a grant over time. And 54% are both deferred and forgivable. And then there are still other DPAs that are true grants at closing or are repayable monthly after closing. We'll break these down further, as well as the affordable first mortgages and tax credits or mortgage credit certificates in a moment. Now, these programs are everywhere. Some markets have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. There's literally no county or market in the country where there isn't at least some kind of DPA or other homebuyer assistance. So who funds and administers these programs? Well, as mentioned, every state has at least one housing finance agency, like North Carolina Housing Finance Agency, who offers a wide array of programs in North Carolina. In addition to state agencies, city and county governments often have community or economic development departments or housing authorities. And a number of nonprofits like NeighborWorks and Neighborhood Housing Services and others operate in markets across the country with varying programs. Many employers like municipal governments, hospitals, and universities also offer their employees down payment assistance. And there are community action agencies, land trusts, and so many other organizations out there, all trying to open new doors to homeownership and promote housing growth and responsibility in their market, your market. And they've all got funded and available down payment assistance programs. So let's take stock of current DPA trends throughout the US. Demand is through the roof. Providers are increasing assistance amounts, income limits, purchase price limits to continue to help more buyers in today's market. New state and local programs continue to launch in markets nationwide. In fact, our recent Q3 2023 Homeownership Program Index report showed 50 new agencies began offering homebuyer assistance last quarter, raising the number of agencies providing support for aspiring homeowners to roughly 1,300. And a number of programs increased by 54, raising the total number of programs offered to 2,300. And 82% of all DPAs are funded and available. There's so much more attention on affordability and down payment assistance now than in many years. These programs are available and are not going away. Now let's take a look at what's available in your market. 43 programs, 36 of which are funded from 32 agencies. Income limits up to $134,000 statewide. Purchase price limits up to $726,000 or higher. And down payment help ranging from $1,000 to $51,000 with an average of $17,000. And approximately 72% of Canopy MLS listings are eligible for DPA. Now, prices can be higher in targeted areas, and this is just for single-family residences. There are some programs that support multifamily housing as well. It's tough to get an average assistance amount, as some programs offer a percentage of the sales price as their assistance amount. When we refer to eligible listings, both the property and the buyer must qualify for DPA. To determine that eligibility, we look at property location and sales price and compare that to the coverage areas and sales price limits for programs in your market. 72% is a large amount of listings that are eligible, and that's because the sales price range is so flexible in your area. Now, all of these programs share some basic universal requirements. For example, they are only for owner-occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of 2 to 4 unit properties as long as they will occupy one of the units. They all still require some minimal investment from the buyer to keep a little skin in the game. This investment can take the form of a monetary investment, which can range from $500 to $1,000 or maybe more. The buyers are also investing time, for example, by completing their homebuyer education requirement, which buyers typically complete a homebuyer education course to qualify for a down payment assistance program. And of course, these are not cash buyers. We're talking about buyers financing their home with a mortgage, so they have to qualify for a mortgage as well. With those universal requirements in mind, let's take a look at the 3 most common types of homebuyer programs and what's unique about each of them. The 3 most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and mortgage credit certificates. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. And remember, as we go, no 2 programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are. So first, let's review down payment assistance programs, or DPAs. Down payment assistance programs are by far the most common type of homebuyer assistance in cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. So just as an example to the right of the screen, we'll start with grants, which gifts that do not have to be repaid. Repayable seconds, funds provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. Deferred or silent second programs, where repayment of the original amount is postponed until one of several events occurs, commonly when the borrower sells, refinances, or there's a change in occupancy. And forgivable seconds, where some or all of the original down payment assistance is forgiven. Often a percentage of the loan is forgiven each year for a predefined number of years. For example, it's common for a forgivable DPA to be forgiven 20% per year over 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses, rehab or repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reductions, the most common uses. All of these uses help the buyer shed the costs of purchasing and financing a new home. We're even seeing more programs allow their funds to be used for temporary or permanent interest rate buydowns. One of the most common misconceptions about down payment programs is that buyers must be first-time home buyers. In fact, there are about 2,300 programs across the country maintained in down payment resource, and close to 40% of them have no first-time home buyer requirement. Beyond that, most programs adhere to HUD's definition of a first-time home buyer, which effectively states that you're a first-time home buyer if you haven't owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive the first-time homebuyer requirement in targeted areas, make exceptions for veterans or certain professions, or just don't have the requirement at all. While down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash up front and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Others may bear interest, but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So for example, many stipulate that the buyer occupy the property for a certain number of years. That may be between 3 to 10 years. And then the lien is forgiven, essentially becoming a grant. For those programs that are not grants, many will take second or third lien position to allow for layering of additional assistance programs. So what are the eligibility requirements? Most have the following limits. Eligibility depends on the program and the funding sources. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, the average income of their market. But basically, they all have income limits ranging from 80% all the way up to 140% of area median income, or AMI, and sometimes even higher, which can creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide, covering your entire market. We even have some nationally available programs integrated into down payment resource. Some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, as an example, requiring a FICO score of 620 or higher. Homeownership history makes a big difference too. Many programs are only for first-time homebuyers, but there are many for repeat buyers or even current owners too. And remember, a first-time homebuyer is simply someone who hasn't owned in the last 3 years. I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain their liquid savings. As an example, think about someone obtaining FHA financing, putting 3.5% down. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premiums and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. When you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases qualify for a little extra home to suit their family needs. Increased purchase power offers a competitive advantage. Of course, reducing monthly payments also allows for a little extra cash every month to dump back into savings, which has been shown to improve default rates. Many down payment assistance programs require the buyer complete a homebuyer education course, which provides valuable information about the home buying process and resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. And more, down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD-certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and hit the market as more competitive and informed shoppers. And most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Now we'll look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value, or LTVs. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher LTV. You can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. Now let's look at the third of the most common homebuyer programs, the Mortgage Credit Certificate. The Mortgage Credit Certificate, or MCC, is available from state and local housing finance agencies in some states. An example in your state is the North Carolina Housing Finance Agency NC Home Advantage Tax Credit Program. Now, this type of DPA offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage interest costs, and you still get to deduct the rest of the mortgage interest you paid each year. MCCs help reduce the buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's look at an example of how mortgage credit certificates work. Take a $200,000 home. The buyer closes and makes 12 payments in the year. They've paid 4% interest, so $8,000 in interest in that year. The mortgage credit certificate allows you to claim 25% of the mortgage interest paid as a tax credit, so $2,000 in this example, but the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. So let's wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased and the income limits and sales price limits are often higher. The idea is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. Now, these targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, or census tracts, or maybe sometimes entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses, or protectors could include police officers, sheriff's deputies, corrections and probation officers, and more. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans. Some offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. And some of these programs offer the same or similar incentives to active military and Guard or Reserves members. We've given you a lot of information today, but we want you to know how to access all of these DPA programs once we leave the webinar. So I'll show you a number of ways you can access DPA info and start to enhance your marketing. When you are logged into Matrix, look for our down payment resource button on eligible listings. We have 2 additional webinars in this series where we'll take a deeper dive into how to find down payment resource tools within your MLS. But essentially, you'll see these down payment buttons on agent reports as well as in your client portal. Click it, and we'll tell you or your client which programs are available for properties they like the most. For a look at how down payment resource is displayed in Matrix, here's the icon in the agent's single line view. Click on that icon on a listing to receive the programs that property may be eligible for. We also have what we call our down payment resource dashboard, where you can access all of our tools and resources, including Down Payment Connect, which we'll discuss further in a moment. That dashboard is accessible from the Matrix homepage under External Links. Now, Down Payment Connect is free for Canopy MLS subscribers. You get your own DPA search landing page for consumers to find DPA programs where they want to buy a home and connect directly back to you to continue the home buying discussion. You don't have to turn it on or pay for it. It's free, and we'll be waiting for all of you. Log into your MLS dashboard and click on Down Payment Resource to get your Down Payment Connect landing page. So what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. You can use your Down Payment Connect link on your website, in your email marketing, and all social media. So stay tuned for an upcoming webinar dedicated to exploring creative use cases for Down Payment Connect. And just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads, just you. So we encourage you to get creative and reach more buyers and educate them on these opportunities. And we'd love for you to join our growing Facebook group, Down Payment Insiders. There, you can join over 12,000 real estate agents, loan officers, housing counselors, and even DPA providers as they discuss best practices with DPAs, first-time home buyers, working with lenders, learning from each other and marketing ideas, and so much more. You can listen in and learn or participate in the dialogue and engage with your peers. It's also a great place to network and connect with loan officers that offer down payment assistance programs in your market. So I'll leave you with a case study that illustrates how important DPA info is for realtors and home buyers. Amber was a new agent in Florida. No one was helping her peers understand down payment requirements, as many of them began to explore homeownership. So she stepped in and learned all about DPAs and built her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. Tell their story, help them, and they will refer their family members and their friends. In closing, please feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. If there are any additional questions, we will be sticking around for a few extra minutes to help answer them. We are grateful for the opportunity to be with you here today.
Will, thank you. So we've had a number of questions, very busy Q&A and chat. Just want to make one thing clear first and foremost. This is not live yet. We've got a ton of questions asking, when is this available? Where are these links? This is set to launch at the end of January, so likely next week. And today's webinar, as well as the next 3 over the course of the next week, They're all designed to show you what's coming and to prepare you for down payment resource so that when it's live, you'll know where to go, what to look for, how it works, how to take advantage of these tools, how to utilize these programs, and you'll have a greater comfort level, we hope, a greater comfort level opening up discussions with prospective homebuyers about these programs, letting them know what's out there, and you'll have access to tools and information and data that can help you drive more buyers toward home ownership. We had a lot of questions about income limits. So I just want to be clear, these programs are using gross income limits just like any standard mortgage. There are some nuances though. Sometimes these programs will calculate income based off of household income, which is all earners in the home, versus mortgage application income, which is earners on the mortgage. That's the only kind of nuance about these programs, other than having to take a homebuyer education class. To that last point, typically homeownership counseling is not involved with these programs, but most of them will require that the buyer completes a homebuyer education class. They have typically a year to close on their home once they complete that class. So there's no reason to wait. There's no reason to let that be a delay. One other common question we got was, is this going to be available in South Carolina? Yes, we are integrating with all native Canopy listings, whether they're in North Carolina or South Carolina. You will see a down payment badge or a down payment button on all eligible listings, regardless of state, and you will be able to access available homebuyer assistance programs for all of those listings. So if you're in Northern South Carolina or Western North Carolina or Greater Charlotte, yes, you will have access to down payment resource. All of you will have access to the entire tool set, and all native Canopy listings will be processed and flagged as eligible with a down payment button in Matrix. Tracy, anything you wanted to cover? Any other trends that you were seeing here in Q&A?
Yes, so we have had also several people asking about our Facebook group. There have been a lot of messages going in chat, so I don't know if anybody caught it, but I did throw that in there. I'm going to throw it in again right now, just so that everybody has it while we're chatting. It's a great place to connect with lenders who are familiar with down payment assistance, and to have great contacts that you can give to your clients and refer them to someone who is already familiar with all of these details, so that you don't have to become experts in down payment assistance, and you can rely on those great contacts you have. So I'm sending that in chat right now, and you'll see that all in just a second. Other than that, I feel like we still have some questions coming in real quick.
Yeah, and actually we're seeing a lot of questions about lenders. So just to be clear, we at Down Payment Resource are not a lender. We do not provide down payment assistance. We are a technology company. We have curated and built a database of all of these homebuyer assistance programs across the Canopy footprint and across the nation. And when we partner with an MLS, part of what we do is we integrate that down payment assistance information into your listing system, so that when you list a property, and by the way, you're going to see all this in one of the upcoming webinars, kind of see under the hood how this works, what it's going to look like in Matrix and so forth. Today was just an introduction to these programs, but you will see a down payment button. And actually, Will, if you don't mind, can you go back to the stats for Canopy MLS's market, programs available, income, price limits, and so forth?
Certainly.
We have you'll see a down payment button on eligible listings. You'll be able to click on that, and right there on the screen, you'll be able to see how many and which programs are available for that property based on location, price, property type. You will also have other tools that allow you to add homebuyer information. You will also be able to provide that down payment button to consumers through the consumer experience, the CoreLogic consumer experience, and you'll have lead generation tools. All of them give you access to where to take the homebuyer education class based on that program's requirements, where to find the participating lenders that offer that program. And these things are going to be different by program, but that's what we do. We track and monitor all of that information about these programs, and we keep that up to date and current so that you don't have to worry about tracking these programs. You can just focus on grabbing the information about what's available and going out to start conversations. There have been some questions too about income, kind of different kinds of questions about income, but Will covered this earlier. The income limits from your statewide programs go up to 134,000, and you're part of the North Carolina Housing Finance Agency footprint. Now, there may be other programs that go higher than that, but we always look at the state agency because their programs are available across the state. And this is from North Carolina Housing Finance Agency, but South Carolina is pretty close. That's pretty flexible. That's like really flexible for getting down payment assistance. And that's one misperception about these programs is that, you know, they're only for, beat up low priced homes, or they're only for low income buyers. They're only for first time home buyers. Not the case. And you can see the flexibilities here. $1 to $50,000, up to $50,000, an average of $17,000 in down payment assistance, income limits up to the 130s, purchase price limits potentially up to conventional conforming loan limits. And we anticipate about 72% of your listings will be eligible for these programs. And that's not an outlier. That's right there in the normal range. We see 65 to 80% in most markets, usually 70 to 80% of inventory is eligible. And people don't realize that, how broadly available these programs are. So you'll have access to lender information, and those are not our partners. That question came up too. They're not our lending partners. We're not getting kickbacks or anything. Canopy is our customer. You all have access to these tools, and you'll be able to find who the lenders are by program through our platform. And Tracy, while I'm talking, I'm seeing more questions come in. Anything else you want to address here? We still got a lot coming in.
Yeah, we have a busy group. I love it. Lots of great questions. Really good questions today. I think that we've kind of covered everything that's been common with the questions that are coming in. There are some individual questions. One thing, we do have actually quite a few agents on here that seem really interested in digging deeper into the details of the down payment assistance programs. When this goes live, because you're a part of the MLS, you actually will have that ability to open up Down Payment Connect, which is something we'll talk about in a future session. And while you're in there, you can do research. You can sort and find specific types of programs, and you can look at the details of those programs. So if you're the type of agent who really wants to dig deeper and learn those kinds of things, you will certainly have the capability to do so. It is not something you have to do, because as an agent, the biggest thing is letting these home buyers know that down payment assistance is out there and that it is available to them. Help is there. They can get into a home, and there are options to help them, and lean on your lender partners who are familiar with down payment assistance to be the experts in that if you want to do that. But if you want to become an expert in it, we have certainly lots of agents out there that are Down Payment Connect customers of ours that have made it their mission to really be very informed, and you can do that with this tool. So that is one thing I wanted to note, and we'll cover that in detail. I think that that's next week. We'll be talking about that. Anything else from you, Sean?
Oh, let's see. I do want to ask the Canopy folks. We've got some staff from Canopy. Anything else you guys want to add? Anything we haven't answered that you want to address for your members?
Just generally, we have more webinars coming. They're going to be recorded. So any of the questions that you have should be answered. It looks like most of the questions that you guys did a great job of answering. So they'll be able to refer back to that. If they missed the first part, seems like a lot of questions were being repeated. Also, you guys are available for support. We have a page dedicated to it, so definitely check that out. We posted that link as well. And we look forward to the 3 future webinars, one starting tomorrow and then 2 more on the 30th and the 31st.
Yeah, likewise. We're looking forward to it. We're super excited to partner with you guys. You've got some really cool tools coming your way. I know we didn't get to every question and they're still coming in. You guys have been super interactive today. We love that. Our contact info is on the screen here, info@downpaymentresource.com. Send any additional questions there. We'll get to you. Apologies. There's so much coming in chat and Q&A that we can't possibly get to all this now. So info@downpaymentresource.com, and we'll see you in the next couple of days on 3 more webinars. Thanks, guys. Have a great day.